I just think that the expectations for coal got a bit of ahead of themselves. Like the thesis for me was always a slow grind. It was always going to be a trade that would play out over time. And I think just expectations got too high for a period. And especially with Whitehaven, I think the the acquisition of Dornier and Blackwater is going to be so accretive. You're just going to have to be patient. There's been some people sort of panicking over financing it, but really with them talking about selling off a chunk of Blackwater, the that will be I'd be so bullish if I could see that, because the amount they're talking, like if they can sell off 20%, they could possibly collect in the vicinity of 700-800 million. That's almost a cash outlay that they had for the deal, which is just absurd. Yeah, no, I still stand by what I said. I think it'll be massively accretive, and any sort of downdraft I see as a buying opportunity. I like the split they now have between met and thermal, because I do see thermal having a rough time for the coming year. It just the warm winter didn't help. We had like warm temperatures again across Europe, across China, across US. I see gluts across all Europe coming out of the winter with 60% still full for gas storage. Means that anyone holding coal inventory is probably going to dump it at some point. And also to top this all off, in Europe, it was one of the windiest winters on record, and so that really juiced up the wind generation. And so overall, if you're like me and hoping for a colder winter, we didn't really get anything going our way. And so yeah, I'm kind of expecting not a lot from thermal for the coming year, but then part of the whole thesis is, well, when you're trading this cheap, like Fangella recently went into negative EV territory, traded a negative EV of 8 million, so market cap below cash. So called me crazy, but I think that's somewhere the floor is not far off there. So I still love the sector, still see a lot of upside, just have to have patience, and I think it'll just grind out. It's just people probably started to expect more cyclicality from the sector than what I think it'll actually do. I think it's more of a long grinding trade. We've got particularly the names that are going to produce good cash flow, expanding production, and going to focus on buybacks. That's where I've really been focusing, and I think that's going to be magic if you've got a really long-term focus. I have an absolute amazing story playing Capesize, like those. Yeah, that market is so volatile, and has got sort of a high rate of scrapping coming as well. I just was never comfortable with where all the demand for, because you're really playing iron ore, and I wasn't that bullish on sort of iron ore by default. So I was never as comfortable as kind of whenever I always come back to sort of the energy trade and the robustness of sort of the growth in energy demand, whereas I'm not quite as comfortable on that with iron ore, not nearly as bullish. And so that's why I went towards dirty tankers. But Capesize, if you see those rates start to move, yeah, you only have to look at the Capesize index to see how volatile that is. Those, when that goes, that really goes. And if that comes with a tightening supply, like we could see some crazy rates there. So yeah, that's something I'll definitely keep on the radar, but it's not something I've dipped my toe in, or even think it's really setting up. Granted, if you buy Capesize and you've got patience, yeah, you'll probably be rewarded on a long enough time frame. Just straight asset values with rigs and OSVs, it's easier to wrap your head around, unless I think there's like a decent moat with some of these subsea players. I find them hard to justify buying over just straight, especially like I think whenever you go into a sector, you've got to find what's like the no-brainer investment. Like coming back to uranium, it was like any company going to buy has to have a better risk reward. This is talking a few years ago. Had to have a better risk reward than just buying straight physical. Like, why take the additional risk? And this is what I came into kind of offshore. Like, why take additional risk if I think it's only going to manage to keep up with the likes of like Valaris or Tidewater? Like, why take that additional risk when I think one's almost just a sitter